Alrighty guys, what is going up? I hope you guys are all having a great and an amazing day today. Now in today's episode, we're going to be talking about NIO stock, ticker symbol NIO. So I hope you guys enjoy, and overall, I hope you guys learned something. And if you have any questions, go ahead and ask them down below and I will get back to you guys as soon as I can. Also, if you guys want to sign up with Moomoo, you guys can literally get a free stock just by signing up. That will be the first link down below, so make sure you guys go ahead and check them out. So now let's jump into it, roll the intro, let's go. Bam! So today the whole electric auto space was absolutely going crazy. We had NIO going up around 25%, we had Tesla going up around 10%. So there's a lot of stocks that were going up. The general market went up today, yes, but why are these electric car stocks going up so much so fast? You know, just the other day we had Nikola Motors that went up from like $12 almost to $100 in literally like 2 weeks, which is absolutely crazy. So why are all these stocks going up so much? Well, supply and demand. When there's a lot of demand for a stock and the supply stays the same, really the stock price gets affected by it and the stock price will go up. So if you guys look at volume, you guys can clearly see that all these stocks, once they increase volume, the stock price will follow that. But for those of you that don't know NIO stock was up 25% today. Now the reason why the stock was up so much is because they had a fundamental catalyst. Really what that is, it's any sort of news that the company puts out and that gets a lot of investors drawn to it. Yes, they announced their sales were up 179%. Now NIO stock has totally recovered from this whole pandemic we're in. Their sales are up 179%, which is absolutely crazy. And in time and uncertainty, you know, this car company is still producing actually really good numbers. And really kind of how car companies look, normally the first quarter and the first and second quarter look the worst and then they get better as the year ends. Now NIO's cars look very similar to Tesla. They have 3 models. They had the ES8, the ES6, and then they had the EC6. All of them look really cool, as you guys can see. But many price analysts think that this stock could go up a lot more. I'm talking like a lot more. Now they do have a medium target price of around $34, and then they have a high target price of $88 per share. So you guys can clearly see why a lot of investors are getting drawn to this stock. But now the real question is, should you buy it? The way I always look at these positions is I do think you guys should buy it, but you shouldn't if you don't have a nice solid base of ETFs and definitely market ETFs or indexes behind you. The reason why is because it's all about risking your money in different sectors. Now if you have a nice solid ETF, that's just say VU, which is just diversifying all of your money in the top 500 companies. Now I do think that's where like 80 or 75% of your money should go, and then the other 20 or 25% should get, you know, put off in either blue chip stocks, and then the, you know, another 5% towards riskier stocks. Right now I would classify NIO as a little more riskier asset just because they're unreliable. You know, you guys can clearly see that the price chart is up and down. It's not really that big growth yet, but when you get into it at these low prices, there's a lot of potential. So now let's actually go ahead and look at support, resistance, and where I see it going in the future. Let's go. Alrighty guys, so we have ticker symbol NIO. You guys can see once this stock IPO'd, it really went from $5 all the way up to almost $14 per share. So this stock has been up pretty high. The stock sold off because it was like an IPO breakout. It really traded in between $6 and around $8. This is where I was making some, you know, swing trades on these positions. I made videos a couple of years ago actually talking about these positions I'm in. Now the stock sold off and really found some support all the way down here at $1.19. So if you guys would have got in all the way back then, you guys would be in some killer profit right now. The profit, if you guys would have got in, would be around 1,200%, which is absolutely crazy. But the stock found some resistance here, which was that old support, as you guys can see, because old support turns into new resistance. So when the stock came up, that old support was now new resistance. So now the stock's breaking through all of those, you know, resistance lines. So now where do I see it going in the future? Now, if you guys are looking at those price analysts, they're saying that this stock could go all the way up to around $34 per share and a high at $88 per share. So all the way up here, do you guys think that that can happen? Realistically, they're going to have to sell a lot more cars. Now, if you guys are just, a little more riskier investors, I would go ahead and say throw all of your money at this, But realistically, you always have to look at risk versus reward. Right now, we're going to be risking, that $11 all the way for it to go up to what? Maybe 1380, that resistance line. So really, for me to be interested in this, I would highly recommend using the strategy called dollar cost averaging. What it is you go ahead and you buy maybe 5 shares a month. What this does is you guys get a better average price. Because if that's say you guys started this all the way back in here, you guys are going to be buying your shares all up in here. So now your average price may be $4. Once the stock starts going up in value, you go ahead and continue to do that. So you're just moving your average price up, and then when the stock continues to go up or down in value, your average price just kind of reflects that. So really, if you guys go ahead and do that, it's going to be the best way for you guys to kind of pick through these dips. And then anytime the stock falls more than, let's say 6%, let's say you guys double what you guys would normally put in. So anytime that this stock really fell down here, you're doubling what you normally put in. And then once it starts going up again, then you guys just go back to the regular amount. Falls that 4% or 6%, whatever you guys set it at, you double in again, and now it continues to go up. So you guys are making a lot more money. But right now, do I think it's a fair price? I do think right now is a little overvalued. I do think within the next couple of days, we'll get this stock really trading between $10 and around $8. I do think that that's a fair price for this right now, but you also have to look at, if that's say you guys buy it now, there's also for, that future prediction for it to go up to $34. So that's why I would highly recommend doing that dollar cost averaging. I do think that's the best strategy to go ahead and do that with this riskier, position. So that is it though. I hope you guys enjoyed the episode. And if you guys did, make sure you guys smash the like button. We'll see you guys tomorrow in another episode. Remember to stay happy, stay positive. Don't forget that you guys can sign up with Moomoo. That will be the first link down below. Take care, guys. We'll see you guys tomorrow. Bye.